Welcome to Stock Shots. Tonight is Sunday night, February the 22nd, 2009. Now I'm going to share with you a piece of an email that I got from Lieb's Market Forecast, and try your best not to laugh too hard. I get this email, and in big bold letters it says, "We are nowhere near a depression today, and here are the facts that will close the book on the discussion. Apart from some massive disaster, the markets will, underscored, come roaring back stronger than ever. This letter tells you why." It goes on to say, "Dear fellow investors, during the next 5 years you will see an explosion of wealth unprecedented in its breadth." I would love, and I issue an open invitation to the author of this email to come on Stock Shots, talk to me about really the basis of this letter. Let's talk a little bit about the apart from some massive disaster part that he references in the email. First and foremost, are we talking about the massive disaster of the stimulus bill? In my mind, the stimulus bill was and will be a massive disaster. Are we talking about our government refusing to let the normal economic flow cause some bankruptcies, start over from a sound base, and go again? We've not had a normal economic cycle since the 80s. Make no mistake about it. You've heard it from Jim Rogers. You've heard Peter Schiff talk about how we need to have the resources taken away from the companies that are inefficient, and those companies have taken up resources that could have been used by the efficient, and that is what has gotten us in the problem today. So I would say that while we've not realized a physical disaster, we've had an economic disaster going on for years. It's been like a cancer. It hasn't been like a heart attack, but now the patient is near death. I just stand so amazed that many are still so bullish, and right now is about 11 o'clock Central Standard Time. When you look at the futures are up. Now, I've been expecting a bounce. We know that there's money standing on the sideline, and again, I've had several people ask me why that I invite the bulls on my show, and I've said time and time again, I invite bulls on my show because I want to figure out what some of the money is doing, and there are bulls out there. There's money on the sideline. So do I expect that we could have some kind of snap in terms of a bear market rally? Absolutely. I think a lot of people are short right now, and I think when some of that money comes in on the sideline, we could see a pretty decent pop. It won't last very long, but I think you will see that pop. Now, many of you that are listening to the show know that I think we're past the point of recession and we're into depression. And when you talk about the depression, you hear so many of the talking heads in the mainstream media say it started with housing and it has to end with housing. Then you have the government coming out and saying, oh, look how great the stimulus bill is going to be. We're going to keep all these Americans in their housing. We're going to fix the housing market. We're going to put in the bottom. Now, wait a minute. My question is, have we ever truly had the government put in a bottom for us? Not in the free market system. This plan is designed to be a disaster. When most of the people, and believe me, I know there are those out there that did just lose their jobs, but most of the people are the ones that went out and got the teaser rates. They were too stupid to realize that they couldn't afford the house, or they were too greedy to look at reality and know that when there came a time that they had to pay the interest and the principal, that they couldn't afford it. What are we doing? We're keeping these people in their houses. Now, let's look at it. Look at it from the side of the renter. Now, if these people were forced to exit their houses, the price would come down, and those that are out there renting and paying their rent on time could possibly get in at more of the true value of this house. But instead, this is artificial price inflation, and we say this is going to fix the system? No way, because let me tell you what's going to happen. Let's assume that the stimulus package does, by some stretch of the imagination, and it might, unclog some of the credit arteries. The very first people that are going to run back out there and get the credit are the ones that got the free ride, the ones that stayed in their house And yeah, I know people are going to send me emails saying, oh, I learned my lesson. There are a minor percentage of people that may have learned their lesson. But for the most part, these people are going to run back out. They're going to max up their credit. And we're going to be right back where we were again. Just like Greenspan, pulling the rates down, opening up credit to avoid a recession when we should have let things come over, start back from a sound base. So I think that we've just set ourselves up for disaster. Now, do I want to quantify that? Yeah, what I think will happen is we'll artificially sustain prices for a short period of time. All of this money that the government is borrowing absolutely has to be paid back. But what are we going to do when we get 6 months, a year down the road? We've artificially held up pricing, and now it starts to come back down again. Are we going to say, whoop, need to borrow some more money, let's pour more and more in? This is an endless wheel until we let the free markets work in housing, until we let the free markets work with regard to the banking system, until we let securities and everything else go back to a totally free market system. We are not going to start over from a sound base. We're putting a Band-Aid on a slashed artery. And if we don't let the free markets work, we're going to bleed to death. Because if we keep prolonging the agony, you've heard Jim Rogers say it, you've heard Peter Schiff say it, the more you prolong it, the worse it gets, and you gotta deal with it. Now let's talk about the other part of the stimulus plan that is bad business. Those of you that have heard me say time and time again, one of the greatest things about our system was its integrity and the confidence that people knew they could have in our system. What are we doing with this stimulus package? We're slamming contract law. These people went in and signed a mortgage, and now we are going to cram the value down. Who in the world? Well, let's assume that the free market started working again and everything was fixed tomorrow. Who is the next capitalist that's going to come to the table and want to loan money? Nobody in their right mind would get in this arena. This is driving me crazy. We're moving our banks into nationalization. We're moving our contract law into government controlled. It's whatever the government wants to do tomorrow. So now the greatest system in the world, where we could depend on contracts and the integrity of our business deals, are all subject to what the government wants to change tomorrow. Not the greatest recipe to see sustained capital investment on a go-forward basis. I'm about to barf with the fear-mongering going on at the government level. Now, I receive emails all the time saying I'm a fear-monger. Not the case. I'm just calling it like I see it. I said I thought gold would go to $12.50 an ounce by the end of the first quarter. We're knocking on 1,000's door. I still think we're going to get to $12.50 by the end of the quarter. But the fear-mongering that I'm talking about is Chris Dodd comes out and talks about nationalization. You take a guy that's supposed to be as high-ranking official as he is in the government, that breeds fear. When you use the nationalization word at that level, and it breeds fear. And what does fear give us? Fear gives us, for the masses, a more need to feel dependent on the government. The full version of the February 22nd episode of Stock Shotz can be found at either www.stockshotz.tv, that's www.stockshotz.tv, or www.stockshotz.blogspot.com. That's www.stockshotz.blogspot.com. Thank you for listening.